Welcome. This is Accounting with Bennett Tchaikovsky. Our topic today, again, we're going to continue on here with property, plant, and equipment, and now we're going to be focusing on the sale of equipment. So this accounting funcast is copyright 2008 to 2018 by Bennett Tchaikovsky. All rights are reserved. So Sahar's mom class call is still ringing, and purchased equipment on April 1st, 2018. So this is the same scenario we were dealing with earlier, except that now we're going to actually sell the equipment. So let's kind of take a look at this. Assume Sahar's mom class call Inc. used straight line depreciation and sold the equipment for $180,000 on August 31st, 2020. Prepare the journal entry to determine the gain or loss on the sale of equipment. But what we'll really do, prepare the journal entry to record the sale of the equipment. And we'll go ahead and change that. So what we're going to do here is we're going to basically go through and do two scenarios. So we'll do this first scenario where we are going through and selling the equipment for $180,000. Now, when we first bought this equipment, we had a $500,000 acquisition cost, and we also had a $200,000 salvage value. Equipment lasted a 5-year estimated useful life, and we computed this depreciation to be $60,000 per year. And if this is not ringing a bell, go back to the property, plant, and equipment video, and you can kind of go back and take a look and see how this is done. So on our books right now, we have equipment of $500,000, and then my accumulated depreciation. We computed the first year, or basically 2018, which is really April 1st when we bought it, through December 31st, and we computed that to be $45,000. How did we get $45,000? Well, $60,000 was for the full year, and we're basically multiplying, going that through and multiplying that by 9/12, or April 1st to December 31st, and that's how we got the $45,000. Okay, so that's what we kind of did in that prior question. So we're assuming that we use straight line depreciation, and we sold the equipment for $180,000 on August 31st, 2020. So what we need to do is that if we're selling equipment, we know in terms of a journal entry that we're going to be getting some cash. And we'll go right here. We've got cash coming in of $180,000. So we're selling the equipment. When we're selling equipment, what we need to do is we need to get rid of the equipment balance and also the balance in the accumulated depreciation. Well, the equipment balance is going to be relatively easy to do, because when we go through and we're going through and recording that, I basically have over here equipment, crediting this here for $500,000, right? Because we're going to basically credit this, and we want to make this balance here 0. So this is really coming over here from here. And at the same time, I need to get rid of my accumulated depreciation balance. Well, before we get rid of it, we need to figure out how much is in here. Well, from the very first question we did, we figured out that, well, we took $45,000 of depreciation in our first year. That was $60,000 for a full year times 9/12, and that's how we got the 45. How much did we take in 2019? We took $60,000, because that was the depreciation for a full year. But what about in 2020? How much did we take in 2020? Well, the amount we should have taken is from January 1st through August 31st. So And this was also changed from the original class hypothetical. So right here, how many months is this? It's January, February, March, April, May, June, July, August. So it's a total of 8 months. So what I'm going to do is I'm going to take 60,000 times 8/12, or this will be $40,000. So I'm going to have this amount in terms of my accumulated depreciation for those 8 months. I have to depreciate the asset up until the date I sold it because I was using it during this time. So here I'm going to add all these up. I'm going to get a total of 145,000. So to zero out this account, I'm going to need, what am I going to need? I'm basically going to need a debit here, so this has a zero balance. So I need a debit of 145,000, and we'll make this a nice, beautiful rainbow color. Let's figure out, we'll use blue. And so I'm going to debit accumulated depreciation. And that amount here is going to be 145,000. So when I'm looking at this part here, and I kind of say to myself, all right, this is on 8/31/20. Whenever I do a journal entry, my total debits have to equal my total credits. And here I have total debits of 325,000. I have total credits of 500,000. So I need a debit for $175,000. And if I put this $175,000 here, my total debits magically equal my total credits. But when I look at this balance here, and we'll kind of highlight this in yellow, is that, well, what do I really call this? What is this $175,000? Well, let's take a look first at our book value. What were we carrying this equipment on our books for when we sold the asset? Well, we had equipment, and our equipment had a value here, 500,000, less the accumulated depreciation on the equipment was negative 145,000, gave me equipment net of 355,000. So this equipment to me was worth 355. How much cash should I receive? Well, right here, Sahar's mom class call, basically received, in this instance, they received $180,000. So if I look at this kind of intuitively, it was worth 355. That's what was on my books, but I only got 180. So what this is going to be, this is going to be a loss on sale of equipment. And that difference is going to be $175,000. Now, if we're doing this in terms of a journal entry, this is a journal entry that we want to go through and memorize. And why is it important that we want to go through and memorize this? It is because whenever we have a sale of equipment, this is always going to be the journal entry that I'm going to be going through and going to be using. And if I need a debit to balance my journal entry, I'm going to call this a loss on sale of equipment, okay? So this will be a loss on sale of equipment. And does that make sense? Well, it was worth to us $355,000. I sold it for 180. So I lost 175,000. So this is going to be a loss on sale of equipment. If by chance this was the opposite scenario, and what if I needed a credit, then I would have a gain on sale of equipment. But in this case, that's not happening. And why is this journal entry in particular so important to memorize? And we'll call this to record sale of equipment. Because if you go through and memorize this, you are going to be able to figure out every single gain or loss situation. When you will see most accounting textbooks, they kind of go, oh, you got to look at this. You got to look at the book value. We're comparing this to the cash received. No, let's make it easier on ourselves. If we can memorize this journal entry, and again, it kind of makes somewhat sense. I've got to get cash here. I'm debiting cash, showing that as an increase. I'm getting that equipment off my books with a credit. I'm debiting accumulated depreciation. And so whatever I need here to balance my journal entry, notice I'm not saying plug, but whatever I need to balance my journal entry here, it's either if I need a debit, it's going to be a loss. And if I have a credit situation, it's going to be a gain. So let's go through and do the same thing with Sahara's Mom Class Call Inc., which is making class call to all accounting classes in the greater Orange area. So we're going to go ahead and bring this down here. So now we're going to kind of change this scenario. But we have here the same journal entry. So assume Sahara's Mom Class Call Inc. used straight line and sold the equipment for $350 cash on August 31st, 2020. Prepare the journal entry to record the sale of equipment. So for here, my cash is now going to be $350,000. My accumulated depreciation doesn't change because I'm doing this as of the same sale date. So my calculation here for the accumulated depreciation does not change. This here is going to be $145,000, right? Again, that's not going to change. It's the same calculation. And my equipment value here is $500,000. Again, that doesn't change. I still have to get that equipment off my books. But what is changing is right here. Uh-oh. Oh my God, Tchaikovsky, you did it. I need to change this. Wow. I probably should re-record this video, but I'm totally lazy. We're going to change this to 420, which I wish it was. So we're going to get $420,000 cash. And what are we going to do with this? So there's a lot of things we would hopefully to do with it on April 20th, but for right now, we're just going to call it cash. So when I look at this, and I've changed the scenario for this second situation, and we'll see why. So my cash is 420 plus the amount of the accumulated depreciation is 565. My equipment here is 500. So what do I need to balance? Well, here I'm going to have a gain on sale of equipment for $65,000. Okay, so right here, I'm going to have a gain on sale because in order to balance my journal entry, I need that $65,000. And let's take a look at how this changes up here. So if I look at basically, this is problem 4A. If I look at 4B, what I'm going to have here is so my equipment is still going to be 500. My accumulated depreciation on the equipment is still going to be 145, but my cash received is 420,000. So my gain on sale of equipment is now going to be $65,000. So it was worth $355 to me. I sold it for $420. I've got my Pawn Stars profit of $65,000. So that is situation 4B. Okay. So that takes care of the equipment sale. I apologize for the errors, which there are many, but I think Sahar's mom, Class Call Inc. is going to call and fix it all. Have a great night, and we'll see you soon. Thank you.